Hi, thanks for joining us. Today we have Sam from Bit Digital. Sam, would you please introduce yourself? Then we'll jump right into the discussion.
Hi, my name is Sam Tabar. I'm CEO of Bit Digital.
Wonderful. So the halving right now is on everyone's mind, and at least in my memory, there hasn't been a better setup for Bitcoin going into a halving. You've got strong buying pressure from the ETFs. You've got
Right.
broader consumer adoption, but also I think improving corporate adoption of the currency. So with that more positive backdrop in place, what do you think happens to global hash after the halving?
Well, I suspect it'll be less than prior halvings, just based on how the industrialization of the Bitcoin mining sector has become. I think mining fleets in general have become significantly more efficient than 4 years ago. Companies are much better capitalized than 4 years ago, and the infrastructure is significantly better than it used to be in the lower break evens. So I think also it depends on the Bitcoin price post-halving. I think much of the network has a break even somewhere about $50,000 range post-halving. We're well beyond that.
Yeah, excellent. And I guess just staying on that same topic of the global mining pool, how much of that do you think is made up by public companies and how much of that is made up perhaps by nation states who are becoming more active in mining Bitcoin for their own reasons?
I mean, this is my guess, my educated guess is that I think maybe public miners represent maybe about 25 to 30% of the market, and small independents probably account for about a 40%. And the balance, I think, is likely comprised of nation states and other privates with very considerable banking. And, why would a country with cheap access to power not mine Bitcoin? It's a no-brainer. If you have cheap access to power, mining Bitcoin is a money-making endeavor.
Yeah, I agree with that. Do you think we might see more nation states enter as this becomes more prevalent and certainly they see the demand?
Absolutely. There's no question. There's no
Yeah.
question.
So let's delve into your portfolio. Perhaps for investors that are less familiar with the story, what does your portfolio look like? What are key locations for you, and what do you see as your competitive advantage when you're thinking about the peer group?
Yeah, I think more than any other peer in our sector, we're the most diversified group in terms of operations. We have a number of operations in the US, Canada, and Iceland. Our main sources of power is renewable energy, so that's geothermal, hydroelectric, wind, and solar. We're about 93% carbon free, which is very different from carbon neutral. Carbon free is that we draw from sources of power that's clean in the first place. Carbon neutrality is, drawing from fossil fuels, buying a certificate to offset the damage, which is not something we do. So we're carbon free. And our mining fleet runs predominantly on carbon free. We do have a business model that's also somewhat unique. We put the money in the machines instead of the data centers. We are happy with this kind of infrastructure light model. We do see benefits in owning infrastructure, so you capture the full margin of the business, but it's really important to be nimble and flexible. That's in our DNA. But for us, it's all about returns. If we think the halving could lead us to some compelling value propositions, and if the price is right, we might consider buying a data center to capture and have this hybrid approach of both being infrastructure light and also having the optionality of owning a data center, having both. That hybrid's really important for us. And the reason it is important for us is, many years ago, we used to be all in China. And before that, we felt like people thought we were paranoid, but we thought that was a jurisdictional risk. And we migrated our entire fleet from China into the United States. And then, 6 months later, they announced a ban on Bitcoin mining in China. So, you don't want to have the rug pulled from under you. And what's one of the reasons, one of the merits for infrastructure light model is that you can remain nimble and you could pull your machines out anytime you want and move them from one data center to another. And so if you have a state in the United States, or if there's a federal directive to ban Bitcoin mining or to impose some onerous tax, we have the ability to be nimble and pull our machines out and put it in other jurisdictions. And that's why it's very important for us to have jurisdictional diversification and operational diversification.
I think that point that you made about using the asset light model to mitigate political risk is a good one and often overlooked by the street that right now is really focused on vertical integration, but also exploring new areas of the map to find inexpensive energy, right? So, perhaps as you were saying, but not to put words in your mouth, but perhaps there's room for both, right? A vertically integrated play in a, call it low political risk area,
That's
and
right.
call it asset light in a higher political risk area.
Yeah.
So as you're thinking about your portfolio, what kind of efficiency metrics do you look at when you're comparing yourself to your peers? What should investors really focus on? Is it, Bitcoin per exahash? Is it joules per terahash? Is it a combination of varying factors? What do you like to look at on your dashboard?
Well, fleet efficiency is certainly one metric. We're currently running at 28 when it comes to efficiency, which I think is beats the industry average. We aim to improve that materially as we upgrade our fleet with even more efficient miners, and we're on our way to doubling the size of our fleet to 6 exahash by the end of the year. Um, Bitcoin mining per exahash is another key figure. We're consistently pretty strong on that metric. And so those are the two metrics that we look at on our dashboard in order to make sure that we know which way is up.
Excellent. And I guess we've been asking everybody this question. What is your viewpoint on hodling and why? And how has it changed since call it Bitcoin ETFs have become more readily available for investors?
Yeah, well, we have a unique treasury management approach where we hold roughly equal portions of Bitcoin and ETH. We convert a portion of our staked ETH into Bitcoin and then stake the ETH to earn rewards and then take those rewards and pour that back into our operation. So it creates this unique flywheel that we've invented. And, now that there's a lot of options on the menu for investors to express a positive Bitcoin view, that being an ETF or MicroStrategy or an issuer in the mining sector. It's very important for miners in the mining sector to really differentiate themselves. And so, we're fundamentally long-term believers in Bitcoin, but also in ETH. And if we didn't believe that Bitcoin was going to go directionally up, we wouldn't be having a mining business in the first place. But we've done a couple of very unique things that others have not in the sector. And one of them is to stake 15,000 ETH. No, so we hold 15,000 ETH and we stake 12,000 of that to capture yield. And I think we're the largest, if not one of the largest publicly listed companies in the US to hold that much ETH on its balance sheet.
Yeah, the exposure to ETH, I think, is one of the call it really interesting aspects of your business model.
There is one more thing, as Steve Jobs would say. One more thing. And this is probably the biggest thing. We created a new vertical in AI,
Yeah.
and we created the largest AI um, center in Iceland, where I am in today. And we have a contract of $50 million per year that's going to grow to 100 million by the end of the year. And we have over 2,000 H100s from NVIDIA, and we're servicing a large language model client. We'll be diversifying our client base in the near-term future. But that contract alone, base case 150 million, that business has started in January, and that's going to go up to 300 million in total if we capture the target by the end of the year to 100 million. That business alone is giving us better revenue, better margins, even on a pre-halving basis compared to Bitcoin mining. So that's one vertical that, the others in the sector have not been able to do. And that makes us impervious to the halving event. We're going to do well regardless of what happens, given this new vertical and this new business. And I don't think the capital markets has given us credit for this yet.
And as you think about that business going forward and your crypto business, how do you think you'll manage the mix of those two businesses? What percentage of your revenue, call it, at the end of this year, but also perhaps in a few years, do you see that AI business growing faster than your crypto business?
Well, currently, let's put it this way. Last year, our Bitcoin mining business gave us $44 million in revenue. This contract alone is already beating this. Sorry, this contract is $50 million, which is more than the entire revenue last year from Bitcoin mining. It's very hard to predict what your revenue is when it comes to Bitcoin mining because it depends on what the Bitcoin price is. But we can predict with on the penny where our revenues are going to be when it comes to AI. And the client wants us to double the, you know, the capacity, so that means we can get to 100 million per year. So it's going to take for Bitcoin to get to a much higher level in order to beat the margins that we have currently on the AI business. And so, we are looking to grow the AI business exponentially and aggressively, especially since we have certainty of revenue and the margins are just much more lucrative than Bitcoin mining is, even on a pre-halving basis. And I don't think the capital markets have understood that about us.
Yeah. Do you see this as more of a pivot in your business or a branching out into a new division?
Well, for now, it's certainly a vertical that's producing much more attractive returns than Bitcoin mining. We are doubling the size of our fleet in Bitcoin mining, so we're still in the game. But when it comes to capital allocation, we will be certainly putting money into AI. And in the past, we've never taken credit. We've never taken on debt or leverage on our balance sheet. We have about, I think, around 140 million on our balance sheet, zero debt. We've never taken on debt in the past because taking on debt to borrow for Bitcoin mining equipment makes no sense since you can't predict cash flow. If you can't predict cash flow, in other words, you can't predict where the Bitcoin price is going to be. It's really very foolish to take on credit to borrow for Bitcoin mining equipment, which is what a lot of our peers did, and that ended up in tears for them. However, we consider taking on credit in order to grow the AI business. Why? Because we can predict
Yeah.
our assets and liabilities much more easily. And so to grow this business, we're very comfortable using credit.
And why did you choose Iceland for this business? Is it due to your commitment to carbon neutral?
One of the reasons is that it's our commitment to carbon neutral. You could use volcanic power here. I'm
Right.
in Iceland now, so geothermal is 100% clean. But also, machines last much longer in a very pristine, clean, dustless, cold environment. And so the depreciation of machines happen. It's much more favorable when you have these types of very expensive, very sophisticated machines. You don't want them in a dusty, normal place. You want them in a cold, very clean place, and Iceland's perfect for that.
Yeah. And that, call it pure clean energy is one of the things that really drew us to covering, call it this evolution of crypto mining.
Yeah.
So it's wonderful to see companies like yours maintain that commitment over the long term.
Actually, we were one of the first to actually start that trend. When we
Yeah.
started that trend a few years ago, people thought it was redundant. It was just a useless thing to do, but we powered through, no pun intended, and now the entire industry is doing it.
Yeah, very good. Well, Sam, thank you so much for carving out this time for our viewers today. I think that this was very beneficial and would love to have you back again soon.
I would love to be back. Thank you for having me.
Great. Thank you.